Good morning, I'm Ron O'Brien, Market and Derivative Strategist for Interfood Incorporated, and this is your Global Dairy Brief for January 10th, 8:08 on the East Coast. All eyes are being focused right now on the cash market in the United States, that is, the cash market for block and barrel cheese. We are currently standing at $2.20 a pound for cheddar blocks and $2.16 a pound for cheddar barrels. That is up from about $1.80 just about 2.5 months ago. So that for the block market, a strong move in the past couple of months, chasing a lot of these protein markets higher internationally. We saw futures play catch up earlier this week and last week in the cheese and Class 3 markets, but we've seen a bit of a sell-off the last couple days. Actually, cheese futures down over 4 cents a pound yesterday at the CME. I wanted to give you guys a little bit of perspective on this cheese market, at least since I've been trading it in 2003. When I started in the business, it was near these levels. Back in April of 04, we were trading $2.20 a pound for block cheese at the CME. May of that same month, we dropped down to $2. By May 21st, we were $1.80. By June 25th, we were $1.45, and July, $1.36. So what I thought was a normal market was extremely inflated. I remember had to do with the Atkins craze back then. But again, $2.20 to $1.36 in just about 3 months back in 2004. November of 2007, we also flirted with $2.20 a pound. By December of 07, we were $1.80. And by January of 08, we were $1.65. So again, that was a 2-month sell-off of 55 cents a pound. May of 2008, we hit record high prices at the CME for block cheese of $2.2850, and only 8.5 cents away from where we are right now back in May 2008. By June, we were $1.92. By July, we were $1.70. December, $1.60, and January of 2009, I don't need to remind the dairy farmers in the United States, we dropped down to $1.07 a pound. So $1.21 sell-off in about 6-7 months. We went under government support in January of 09 and for most months in 09, but however, the government didn't buy any cheese. That's another story altogether. But again, the $21.50 sell-off in the end of 2008 after we hit record high prices. Fast forward to March 2011, we went back up to $2 a pound. By April, we were $1.5950. And it just shows you the extreme volatility once we get any type of $2 handles. July of 2011, we went right back up to $2.1550 a pound. And by August, we were $1.72. So about 45-cent sell-off to near the end of July. And the latest rally, not including the current one, was in October of 2012 when we went up to $2.12 a pound in the block cheese market. By November, we were $1.90. December, $1.67, and January, $1.57. So another over 50-cent sell-off right after we hit these levels. And that's what traders are pricing in right now, a bit of weakness. You look at the February cheese contract, it's $1.9830. It's quiet this morning, but it sold off pretty sharply yesterday. $1.9830 compared to the cash market, there's a 21.7 cent discount. And that's pretty appetizing for end users and hedgers. But what the market is expecting is complete demand destruction domestically at these levels, and your traders just bringing cheese to the exchange. It's a bit different, I would say, out of all of these moves since 2004, the situation where global whole milk powder stocks and global whole milk powder demand, how it stands, and just the function of the markets in general, it has cleared away a lot of inventory. It's going to be a real tough go at it to get these markets to see some of these similar drops. But again, the market is expecting a dramatic pullback, and when we do see pullbacks in dairy, Buyers kind of step away because they have the ability to buy on the prior week's average, so they wait for the market to bottom. It creates a major gap. I don't really think you could even buy cheddar blocks off of last week's average right now. That's 40-pound blocks. So it's going to be interesting. What I'm hearing is technically what happens here is sometimes end users that have allocations to buy cheese from processors, they sometimes back away from the market, and they find a way to step aside, and then that product essentially needs to go somewhere, comes to the exchange. Or you have products that have cheese that goes into another type of cheese that you can't bring to the exchange. Those contracts get canceled, backed away. That product goes into American cheese, and it comes back to the exchange. Anyway, we're likely going to see some pressure here. Market's pricing it in, but exactly how much is the million-dollar question. It's going to be tough, in my opinion, to see a 25-cent break here, which is the market is pricing in just at the end of the month, especially as farm bill negotiations are stalled, and that's overhanging the markets where commodity products could be going to the government as soon as 30, 40 days from now. But again, dairy division in Washington right now. You have the Senate bill that National Milk supports. You have the House bill that IDFA supports, and really it's the major sticking point now after the food stamp deal essentially has been done. But all of that is kind of driving markets here in Chicago. We saw a sell-off yesterday. We're seeing a little bit of support, but again, April cheese down 1.1 cents to $1.81. The 2014 cheese average is $1.82 a pound, almost 40-cent discount to where we're pricing right now. Great if you're an end user or that's buying on the futures curve. There's nothing better than having the ability to find or at least fix your price at lower levels in the future. It's not something that normally end users of dairy or dairy producers, milk farmers, I guess, have the ability to do, to go and buy product cheaper in the future. But at the moment, cheese producers, cheese end users have the ability to fix their price at cheaper prices, and we call that a backward-dated futures curve. We currently price Class 3 milk at $22.21 a hundredweight. If that hits, that'll be the record high price. Again, we've been higher in the cheese market before, but we've never had, I think, the whey price to also give it a bit of a kicker over the record high price. 22.21 is where we price Class 3. The 2014 average for Class 3 is 18.52. We have WASDE coming out today, World Agriculture Supply and Demand estimates this morning, and that should give us another estimate. I wouldn't be surprised to see them up their Class 3 projections, as well as Class 4. Class 4, it's essentially been steady. It was supported in the front by those weekly AMS butter and powder numbers, but we saw powder futures sell off sharp yesterday in the back, in the second quarter, in the third quarter, down 1 cent, down 2 cents a pound, just pricing in some weakness. What I'm thinking about is what's going on here is you've had so many traders get so bulled up over the past months about powder, and essentially what they did, or some traders do, is they buy Class 4 futures and then they strip out the part that they don't need. In this case, a couple months ago, they were buying Class 4 to get the powder risk and then selling off the butter. And now, as powder has topped, maybe it appears to have topped in the States around 205, 208, 210 a pound. Globally, same kind of prices for S&P. You've seen pressure coming into the powder futures market, and then all of a sudden global demand in the butter market, and you've seen some of these speculative traders, it appears, as short covering in butter and long liquidation in powder. So it's an active market. I wouldn't be surprised to see some solid demand still come into this second quarter for powder, just because of how hot this global market is. We talked a couple days ago about S&P futures in June. We're up $400 or $500 a ton on the NZX, and I wouldn't be surprised to see a bit more support at that $4,500 a ton range. NZX futures in June are 5,100, but again, like GDT, we've seen support in the $4,500 to $4,700 range. But no real action to speak of on the NZX this morning. Butter on the Eurex also extremely quiet, but trading at a dramatic premium to our markets, even though our butter futures have been up sharply in the past few sessions. February butter this morning is bid at 169, 125. That's just about 2 cents above the cash market at 167, which was up another 2.5 cents yesterday. Butter futures pushed through the highs of December yesterday, and I think that's kind of what brought in even some more short covering. But these butter markets have been on fire due to exportable 82% demand in the States. Again, we were trading $1.52 in the cash market right around Christmas time. Now we're trading $1.6750. Show how just a couple weeks changes things here in dairy. But don't get lulled to sleep, sellers. A lot of risks still lie around the corner. I put a lot of information this morning on dairypost.com. I'm putting it out. If you don't get that email, make sure you sign up for it. My contact information is at the top of dairypost.com. And then at 10:40, I broadcast live from the Board of Trade. I'm here in sunny Miami, but again, from the Board of Trade, I broadcast real-time bids and offers in the 3 auctions: cheese, powder, and butter, truckload cash markets that price essentially these dairy commodities to the farmer. Outside of dairy this morning, March corn down 3.409 a bushel, March wheat down 2.582 a bushel, and Jan soybeans up $4 to $13 a bushel. We're likely going to see some pretty big stock numbers coming in this morning. I think supplies are close to 40% higher than they were last year. That is the supply of corn. But again, we're off. Essentially, corn has been cut in half over the last year or so, coming down from $8 corn to $4 corn now. The question is, how low do we go? Do we really break under $4 today? I would probably, if I was a producer, especially in the state of California, a milk producer, I'd be looking at getting some coverage on in this grain market to the upside, and then perhaps some downside coverage in maybe the Class 4 and cheese futures markets. But again, if you need anything from me, give me a holler. It should be interesting today. Have a great one.